stocks are in sell-off mode. The Dow's down about 777 points right now. S&P and NASDAQ also on track for their worst performance now since January and just continuing a very long losing streak. Joining us is Eric Freedman, U.S. Bank Asset Management Chief Investment Officer. Eric, what are you guys doing with stocks right now?
Yes, sir. We've been in more cautious defensive mode. We think that the areas you really want to be in are utilities, infrastructure, and energy. Generally, boring parts of the market, but boring is pretty good right now. So our viewpoint has been really to emphasize infrastructure, real assets. Also, we've been warming up to short duration fixed income, really is more of a safe haven as opposed to a place to make a lot of capital. So we do think that the buys for the Fed next week will be tightening, and the opportunity for better returns in the equity market is probably a couple months out. So we'd be still in more defensive mode than aggressive mode at current levels.
Couple months out. Talk to me about that, Eric. How will you know when you want to start buying again for your clients?
Yeah, I think a couple things. Number one is that this does boil down to the Fed and their forward guidance, and it seems like a generic thing to talk about because everyone's talking about it. But again, your prior guest mentioned it. The Fed goes to 75 basis points. There's a repricing that has to happen just as a function of interest rates. When interest rates go up, assets have to reprice. The second repricing would be if we start to see consumers weakening. And that's the swing part that we think is going to be really important. We did see evidence that there has been a decline in savings. So it does appear that consumers may be getting a little bit stretched. And if the Fed realizes that, some of their tightening techniques are actually providing a greater headwind than they want, that could be the time that we step in and get more aggressive. So we do think for the next couple of meetings, this will be a bit of a trial balloon from the Fed, and that investors don't have to be in a great rush to add risk to their portfolio. So again, watch the consumer data, watch reactions from the Fed. We still think that's a multi-week story as opposed to a today or tomorrow story.
Down 2.7% on the S&P. You say you like real assets. So you're talking about stocks of energy and infrastructure plays?
Yeah, I think for equity investors, and certainly that's a big part of your viewership, utilities, infrastructure, which you can own an ETF form, as well as energy, even though energy feels stretched. We just think that gap between drillers, there's just not a lot of people out looking for oil right now for lots of different reasons. So we still think that an equity relative, we'd still be involved in those sectors in particular. We do think, and again, this sounds maybe a bit boring and prosaic, but even things like short duration municipal bonds, those have gotten crushed. Those start to look more attractive. So we would certainly encourage people, while stocks are very familiar, this is a time to really be more in touch with the global macro environment. And certainly there are things beyond stocks that you can own. So those would be a couple of things we're focused on right now.
Eric Freedman, thanks for joining us with the tips. U.S. Bank Asset Management.